All right, everybody, Stocks by the Numbers, welcome back. Wanted to take a quick look here at a couple of companies that just reported earnings. The first one I wanted to look at is Vimeo, ticker symbol VMEO, listed here on the NASDAQ. Stock closed $3.68, down 15 cents, just around 4%. As we see now, just pulled down after hours to about 3.5, down almost 5%. And we can see we have to go to the company's website here to pull up their actual numbers, but the numbers, in my opinion, looked pretty decent. You could say it was mixed in certain segments, but overall it looked like they beat analyst expectations. As we see what were estimates, we can come back, we can look. 102.369 million, loss of almost a share. And if we come here, we can see Q 2023, Q4, 105.5 million on revenue. And then we come down here, diluted loss is in parentheses, and we can see for Q4 of 23, the company posts 5 cents when expectations were a little less than a loss of 1 cent per share. So Vimeo currently taking a little bit of a hit here after hours, but overall I still like it. And when we pull up the big chart here, we can see that the stock was in this upward channel here, and we recently came down to the bottom of the trend line, and now we just broke. So we have to see how the company continues to trade after hours and of course pre-market moving forward, but the company technically did beat on the top and bottom line. So moving forward, I looked at Vimeo a while ago, and again, it looks like we're staying in this longer term little channel, but overall, I said, in my opinion, I do still like Vimeo. Of course, everyone's favorite stock reported earnings today, Nvidia, and we can see Nvidia is now up a little over 8% here. And if we look after hours, obviously no surprise, the company beats on the top and bottom line. Again, somehow, even with analysts pumping up these expectations on the revenue side, the company is still able to come in head and shoulders above what analysts were expecting and just come out, even on the EPS side as well, just come out several percentage points higher than what analysts were expecting. So, you know, if they're really growing at that rate and the estimates aren't following in the same proportions, then obviously we're going to continue seeing what could be viewed as quote-unquote lowball estimates. But overall, we all know that Nvidia is the leader in the AI space, and you know, chances are I'm sure the business will keep rolling in. But again, I mean, look at this market cap, over 1 2/3 trillion. We have a PE of 92, and a lot of these numbers do look good, but even with this 20 billion coming in, 22 billion to close the year, so the last 2 quarters is 40, that's 53, that's 60. So the company made $60 billion in 2024 and somehow is worth 1.67 trillion, and again, even more now. But, you know, in my opinion, it's gotten just too high too quick. But obviously, if everyone keeps buying it and price targets keep getting increased and they keep, you know, upgrading future forecasts for both quarters and fiscal years moving forward, then obviously the stock is going to continue to go higher. Rivian, a little bit of a different story. As we see here, the company misses on the EPS side and actually comes in above analyst expectations on the revenue side. But overall, I feel like they've been beating up these EV stocks recently, right? So I just had a personal feeling that almost no matter what this company posted, they were probably going to bring the stock down. But as you see here, Rivian supposedly falls after annual vehicle production forecast disappoints. So obviously when these companies not only beat earnings, of course that's relevant as well, but also more importantly, what are they forecasting moving forward? And it always brings me back to something like a PayPal, right? I feel like every time PayPal posts earnings, like it's almost like a layup that we know that essentially they're going to beat earnings more times than not. However, it's always some margin that got lowered. Recently, they lowered their forecast moving forward on the EPS side, right? So it's always some forecast or some potential future guidance that could affect the price of a stock here, not necessarily the immediate numbers coming out. On the flip side now, we have something a little bit different here. Lucid, LCID, and as we see, the company missed by a huge chunk on the revenue side here, missing by over 12.5%, posting 157 million on estimates of almost 180 million. So that one is a little bit more cut and dry. There were a bunch of symbols that I mentioned in the Discord, just giving my opinion if I was to take earnings plays, how I would play it. MRO is one that I said will probably beat earnings, and I would probably consider calls or shares going into earnings, but as we see, it's not really the biggest mover. Stock currently up only about 0.5% here after hours, but we can see nice beat on the top and bottom line here, 9.5% on the EPS side, almost 2% here on the revenue side, coming in roughly 31 plus million above analyst expectations. There were also some food companies here that posted earnings. We had Cheesecake Factory come out and post earnings, and in my opinion, I actually said puts on cake, and as we see here, the company comes in over 9% beat on the EPS side and slight beat on the revenue side as well, so coming in above analyst expectations. Well, we could potentially see, if we just have some headline here, comp sales up 2.5%. Of course, I'm going to have to look into this now. Portfolio has been held in profit 13 weeks. Okay, so year-over-year revenue is down. As we see here, this time last year, 892.8 million. The company posted 877 million. So beat the analyst expectations for the quarter. However, I'm assuming because revenue dropped down year-over-year, they're basically forecasting that it is going to get potentially worse before it gets better. There we go. They missed out on a week. Okay, fair enough. All right, we'll give it to you. Outperform casual dining industry. Yeah, I mean, overall, again, we see this immediate reaction, and you can see the stock taking a hit here, down 8%. Let's check the numbers here real quick on cake, out of curiosity. 1.75 billion. Nice dividend. 20 PE, okay. Decent beats, 3 of the last 4 quarters on the EPS side. Yeah, we can see it looks like revenue was kind of stepping down actually for the last 4 quarters, and then they came out with 877. Yeah, so that's more than the last 3 quarters that they did, all of Q1, 2, and 3 of 23. And I can understand if Q4 is their best quarter, you know, holiday season, I guess more people go out and dine out at the Cheesecake Factory, which is fine. Q3 here, 784, lost 2 million. And now Q3, 830, made almost 18 million. So that's interesting, actually, because I can appreciate the fact, like, in the moment it's down again, technically year over year or whatever, but overall, not the worst we've seen. And, you know, chances are the company probably has a lot of debt on its balance sheet. I didn't really want to go into the all the numbers here of these companies. I just wanted to do quick little earnings updates. But I could throw cake on the board, and actually we can come back to it maybe in a day or two. Wanted to take a look at Jack in the Box as well. Jack in the Box. 195, not $6. Okay, that's a big difference. 195. Okay, so slight miss there on the EPS side. Nice beat on the revenue side, coming in 6.7 million above analyst expectations. Signing new agreements here. And there was also Jack in the Box Backs fiscal year 24 outlook. Here we go. Jack in the Box repurchased 300,000 shares of common stock for 25.2 million in Q1. So usually, like we always say, when a company is willing to buy back their own stock, not only does it show that they believe in the company, but of course they feel that in this moment, the stock may be considered undervalued or fair valued and will most likely be worth more in the future. So obviously the share buyback is a pretty good sign. 1.5 billion. Yep. 11 PE. So that's why moving forward, we could actually say it's overvalued. I looked at the stock personally a while back. I don't recall if I mentioned this in the Discord, to be perfectly honest with you guys. But yeah, long term, I saw this kind of rising wedge setting up. I had this circle here. And as you can see, that was several quarters ago. And the company came out and beat, but it broke at the apex and dropped all the way down here to 60 from up there at 90. However, of course, this was September, October, so markets were pulling back, so that kind of helped add to the break of that rising wedge. But yeah, sometimes I'll just randomly look at a stock and then forget that I looked at it, and then we'll come back to it, and you'll see things like that. But yeah, no, Vimeo we looked at already. Five networks. So this one down 8.5% as we see. Nice beat on the profitability side there, over 26%, coming just about in line with analyst expectations there on the revenue side. Outlook issued, shares decline after hours. Okay, so I'm assuming that analysts are expecting 32 and 245.6. There you go. So that's the reason why, what are we looking at? 5.9 is down after hours right now. As you see, the company is projecting 239, 240 million for Q1. And analysts were expecting, it looks like they're going to beat on the EPS side. However, analysts were expecting, as you see, 245.6. And expecting 214, 218, 105, 106, and 106. Okay, so for 2024, the company is saying that they might slightly come in under this 1.06 billion mark. And of course, moving forward now, Q1 of 24, the company is expecting to actually be shy by about 5 million and change on what analysts were expecting for Q1. So boom, stock's taking an 8.5% hit. Yeah, there were a lot of earnings here, so bear with me. Like I said, I just made some random calls, just giving my opinion in the Discord of what we might see. But I just wanted to go over some of these numbers here with you guys. BALY's looks like it was trending downward. I said, in my opinion, BALY's puts. I would stay away from BALY's. I wouldn't take a call on it personally. And as we see here, the company had big losses for the quarter and ends up missing on the revenue side by over 11.5 million. Stock right now kind of flat here after hours. Not seeing much news. 2.5, 2.7 for 24. And how's that stack up out of curiosity? 2.5 for 24. Okay, so it would be slightly up from 22. And if we check 23, it's about 1.2, 1.8, 2.4. So, yeah, so, okay, so, yeah, they posted like 2.4 for 2023, and it looks like they're kind of going to just maintain that for 2024. So, not necessarily bad news, but of course, you come out with a big miss after the stock's been basically trending downward over the course of the last 12 months. You can see it took a big hit last quarter when the company came out with a really wide losses again and another miss on the revenue side. So they obviously brought it all the way down here to about 7, and then you saw the bounce coming up, and then now, of course, with the stock here, 10.25. Chances are, in my opinion, it will probably come down to about this $10. What is this low here? 10.05. So that could potentially be the next mark. And I understand that a lot of people may make the argument for the double bottom, but in my opinion, I actually think it's going to flatten out. And, there's your top line, and it's probably more than likely going to end up forming a descending triangle and breaking down even further back into the 8s and the 7s, in my opinion. What else? What else did we have? Coca-Cola Consolidated. We do not have after-hours action for COKE. My apologies. Bear with me. I know there was another company that I spoke about. Unless it was just Coke. Now I can't remember. Lucid, Cake, Jack in the Box, Churchill Downs. this was one that I personally liked. I was seeing the growth in revenue, and when I originally spoke about it, it was right here after the company did a 2-for-1 split. We were kind of in this symmetrical triangle. I felt that the stock was going to pop higher here on the announcement, hoping that the company was going to beat on this big quarter here. As you see, the quarter before, about 559 million they posted in revenue. You can see for this quarter, estimates jumped up to 792 million. You can see the company came up short by about 24 million and missed on the profitability side as well. So the stock ended up taking a hit. We can see we drop down. We kind of start forming this descending wedge. Earnings come out. Boom, they beat. We pop back up basically higher than our apex actually and get back up to 136. And since then the stock began to drop down again going into these earnings, and we can see very nice beat on the EPS side and beating by a little over 8 million on the revenue side as well. So chances are Churchill Downs, CHDN, probably going to start gaining a little bit of momentum moving forward. Again, this is a entertainment company they call it, but this is like horse racing, casino gambling, and it's casino gaming, excuse me. But yeah, Churchill Downs was another one. And BTG, B2Gold Corporation, as we see, really been getting beaten up as of late. We can see the stock closed here at $2.52, less than 10 cents away from the 52-week low here of 243. However, overall, again, I know they've been beating the stock up, but overall, I don't know if I would really beat them up this much. We have a market cap now of about $3.25 billion. Look at that dividend now yielding over 6.33%, and we have a PE of sub 10. So again, kind of beating the stock up, and I understand when I looked at it as well, I kind of said that it was just mixed. We're not seeing a lot of consistency. We may not know what to expect from the company, but 2 beats, 2 misses in the last 4 quarters. Revenue has slightly been stepping down, it looks like. And of course, the profitability goes negative for Q3. But overall, over time, we have, I know a lot of people mention that they like the company for the long term, and they're supposedly, setting up new sites and new mines, and wait till this starts happening, in 2025, and they're projecting that it's going to get even better out in 2026. So I can appreciate the fact that everyone's still kind of pumped about it. And again, going back just the last couple of quarters, the company has technically been beating on the revenue side here. There was a nice 2 back-to-back quarters there, and then we can see last quarter, even though the EPS miss was pretty wide, the revenue still came in above analyst expectations. So even going back to 22 here, 1.6 billion, and the company right now 3.2 billion. So they're trading, 2 times yearly revenue. But again, that's looking at 22 revenue. However, it was higher, it looks like, than 23. 470 and 470 is 940, and that's 1314. So yeah, potentially 19. That'll actually be the most going back the last 5 years, eclipsing what they posted in 2020. So if the company actually does come in and post a revenue north of this 512 million mark, I actually think that the stock immediately tries to shoot back up here to $3+ and get back in this range that it was in. Because I know going all the way back here again, we were kind of noticing this long-term symmetrical triangle that the stock was in, and expecting, due to hyperinflation, expecting them to continue to print dollars and devalue the dollar, which would obviously inversely increase the value of gold, silver. I was expecting it to actually break higher as opposed to break lower, but that is the opposite of what happened, obviously. But overall, BTG, again, a little bit inconsistent, but it looks like if they post a good quarter here today, then the company may actually start to gain some traction and get back to where it was. I'm trying to find where it is. I believe earnings are coming out 6:45 p.m. Eastern Standard Time, so about an hour and a half from now. But we'll see what happens there with BTG. And that's pretty much it. Just want to do a quick update. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.